You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-fun Options Insider Radio Network. A baker's dozen worth of programs there on said network, including 400 archived episodes of this here program, the Option Block, this being episode 401, I should say, embarking on into the 5th century of this program, which is crazy town. But check out all those archives, of course. Where can you find them? Well, wherever you find this show, including iTunes, Aha Mobile, Stitcher. Those are the big, audio sources. Of course, our mobile app available for all of the platforms, iOS, Android, Fire OS, even our flagship website, the mothership, theoptionsinsider.com, all that fun stuff baked there. You got the homepage player up there. You can just go up and see, hey, what's the newest show available on the network right this minute? Chances are there's something fresh waiting for you there, or you can click on the Insider Radio Network tab and select your favorite show from that drop-down overlay there and go into the archives and listen till your heart's content. And I know, seeing the feedback on the app and in the email and the Twitter, that a lot of you are doing just that, so glad you guys are enjoying the archive. I've threatened to launch a best of show. I plan to do that any time now. Once I get some time to actually sit down and do it, we have to craft the VO and all that fun stuff and actually launch the show and start selecting the segments for it. But we'll probably get that going sometime in the next couple of months. So you guys can check out all the fun stuff you may have missed, particularly some of the earlier stuff in our archives. Our archives now in January here. This is 8 years of the Options Insider and the Options Insider Radio Network. So we have quite a bit of content, as you might imagine, a lot to parse, and you guys may have missed it if you tuned in the last few years even, so we can get some of that up there, as well as good tidbits from all of our current shows as well. It should be a pretty fun segment, so we'll get that rolling one of these days. Don't hold me to it, but soon, and you can enjoy that as well on all of your commutes and at your work and everywhere else you listen to our fine programming. All right, and joining me on the old program today, no Viceroy, I'm sad to say, but we are joined by the other colorful characters on the old all-star panel, starting off with the man beaming in from the hinterlands of Chicago, a.k.a. St. Charles, Illinois, via some magical technology called Bluetooth. None other than Uncle Mike Tusaw from RCM Wealth Advisors and RCM Asset Management. Uncle Mike, welcome to the show, and tell us of this mystical tool called Bluetooth.
Well, before we do that, I got a question for you. What are you going to do when you get your 14th show? I mean, that baker's dozen really kind of rolls off so nicely.
It does.
Are you going to get rid of a show to keep it at 13, or how are you going to handle that?
Maybe I'll cancel one just to keep it at that nice, manageable number. I don't know. That's a good point. I hadn't thought about it until just now. It's going to break my flow going forward.
It flows so nicely. You're going to have to think of like something for 14.
There's got to be some old English term out there for the 14th item that I could dig up somewhere. I'll find something.
All right. I have full faith in you.
And welcome to the show, sir.
Thank you. Good to be here. That's for sure.
And also joining us on the old All-Star panel today, beaming in from the true hinterlands, a.k.a. the entire state of Maine, naught but hinterlands up there, Mr. Andrew Giovinazzi from the pit, as well as some of our fun, unusual activity stuff floating around here on the old Options Insider. We're sure to keep him busy. Mr. Rock Lobster, welcome back to the program, sir.
Always a pleasure to be back to the program, although I was about to say to be back to my own program, but I just did a head spin. This isn't my program. This is your program.
You think you're taking over the whole network now? Is now the Andrew Giovinazzi network? That's what it is?
I don't know. I felt like I needed to spread out a little bit.
Yeah, I'm taking this show now, too. Damn it. It's my show. I want it. Welcome me back to my own show. That'll be for tomorrow, so we'll save that for tomorrow.
Yes.
All right. And with the team pretty much assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, and welcome to the Trading Block. This is indeed the portion of the program where we tell you what's catching our eye, what was catching our eye during today's trading session. We are recording this, of course, on Thursday, January 15th, right in the middle here of the first month of the year. And it's been an interesting week so far for the markets. Not a lot of love for the equities really across the board. Some aggressive selling, including seeing some of that continuing into today with most of the major indices selling off fairly aggressively. The Dow, a bit of the laggard on the day, actually only down about half a percentage point, or about 100 handles or so. It's still ticking around here on the close. S&P down about nearly a full percentage point, or about 18 handles. And Q's leading the charge to the south, down about 1.3% on the day. And of course, VIX cash well into the 20 handle range now, ticking up today to right about just a hair shy of 22.90, up about $1.50, or just near that level on the day. So a lot of interesting stuff piling in on the market, causing us to have a bit of a sell-off. We saw some bad earnings before the open. That doesn't really help things. A lot of stuff coming out of the financial side of the space these days, not all of it rosy. And that, of course, leaning on the market as well as some other macro issues as well. So a lot to discuss. Let's get right to it. Perhaps we'll kick things off with you, Uncle Mike. What really caught your eye in today's market activity?
There's gold in Demdare Hills. Just in looking at it, gold has had a little bit of a rally recently, and I got to say that it's pretty exciting, and that it's been such a dead thing over the course of the last few months. It's been like watching paint dry, but now apparently the paint is dry and starting to move a little bit. I think that the combination of just as Andrew even texted on the Swiss franc, the news on that this morning, combine that with the fact that it's just so doggone low, and I think now is a very exciting time to be in those shiny metals again.
Yeah, we don't get into currencies that much on the show, but of course, the Swiss franc essentially letting the dice ride over there is a big story as well, also weighing on a lot of markets around the globe. Of course, I mentioned earlier the financials, Citi taking it on the chin before the open, closing today down off about 4% on the day. Bank of America also faring poorly before the open today, off about 5.5%. So those two also weighing on the market. We'll get some other names we'll get to in a little bit, including, I believe, my old stomping grounds, Intel, reporting after the bell. But before we get to that, Mr. Rock Lobster, what caught your eye in today's activity, sir?
You know, the Swiss franc kind of blowing everybody out of the water. I have to imagine there was a lot of people with the Swiss franc, short the Swiss franc along the euro trade. I guess that was a popular currency trade. And I think there's a lot of desks that are getting blown up by that. The 10% move in a currency is, I think it is off the black swan of black swans for a one-day move. I don't even think they model it like that far. So I think that caused a lot of pain. And when a lot of pain in one place, traders or funds have to sell, raise cash, do whatever, and they sold stocks today. I mean, the market didn't look so bad most of the day. I mean, it was down. It was trying to get back a little bit. The Dow's down 100 points. That's not that big of a deal anymore at 1,700. But then they sold the S&P 500 off at the end of the day. It just seems like they dumped everything to raise money. They dumped the sexy stuff like Apple. They dumped Facebook. Names like that funds own, and they're up probably a lot of money on. So, you dump your Apple today because the Swiss franc goes totally ballistic. So anyway, that's what I think it is. It's just kind of a mechanical function. And we'll see what happens tomorrow. We'll see what happens with the Swiss franc tomorrow. But I think that action kind of percolated over into everything else. That's why gold, I think, rallied hard. Why treasuries, I think we had a closing low for yields, I believe. Not quite sure, but it's darn close if it isn't. And I just think there's a lot of panic. And I guess the market wasn't settled. And then you see this major kind of about face by a central bank freaks people out even more. That's what I took from the action today. So probably a buying opportunity. I sold some puts in a couple places, but other than that, we'll see what happens tomorrow.
Well, to add to what Andrew's saying, everything is correlated. 24 hours ago, if you'd have said to someone that the Swiss franc is going to cause Apple to go down, I don't think they would have believed you. But ultimately, we do face macro risk even on individual equities. And one of the things, me being the king of all Apple barons, so to speak, one of the things that I talk about a lot with all of my fellow Apple lovers out there in Apple loving land, I've heard people come back and say, well, Apple's really not going to be affected by a lot of the macro risk because Apple doesn't have to deal with oil or with things like that. Well, they kind of do, because of the fact that is it possible that a fund could have a position in the Swiss franc as well as Apple? Yeah. And if something this drastic happens, as Andrew put it, the black swan of black swans for a one-day move, then that's going to have some type of a carryover effect. So the point that I want to make with this is that for all of my Apple lovers out there in Apple-loving land, Apple can be affected by macro risk, and today is an example of that.
It's funny, I spent most of the morning and indeed all yesterday at the Securities Traders Association of Chicago meeting here, the STAC meeting here in Chicago in lovely January here in Chicago. We talk about all the myriad of topics of these types of events, and this Swiss franc deal happened this morning. I didn't really hear a lot of people bandying it about, which kind of surprised me because it seemed like a fairly substantial development. Yet a lot of other topics were on the mind of everybody. How to get millennials into the retail business from a brokerage perspective. All kinds of other weird topics were being bandied about, but not a lot on the specifics of actually the euro, the Swiss franc and the euro, which kind of surprised me a little bit. And you're right, Andrew. We're used to talking here in the equity and index option land and in the underlyings on rather larger, more substantial moves, 4, 5, 10% sometimes in these underlyings is not unheard of. We're used to talking about underlying swinging up and down that way, but it's a much more minor fluctuations they really fixate on out there in the currency land. Everything's double and triple crossed, and they trade in much smaller little ticks, and they fixate on those. And when you have multiple assets trading against another one, any even small variation can cause a lot of damage to your hedge or to your speculation or whatever the case you may be for what you're trading. And to see this mega event happen out there with the Swiss franc, you're right. I think black swan of black swans may indeed be an apt term for what we're seeing out here. In terms of other things that we're seeing, actually, I mentioned my old stomping grounds is announcing after the bell. Doesn't seem like, actually they're inverted right now, it seems like, so I don't know if the number is out yet, but good old Intel reporting after the bell here today. I remember all the old earnings I spent out in Intel. It was a fun time. Let's just say we saw a lot of interesting whipsaws. I've talked before on the show about all the crazy gamma hedges I would work way out there in the wilds and in the weeds. And sometimes you get hit on some very, very crazy levels. We'll see if that's the case today. Intel lighting it up today, as you might expect, doing nearly 300,000 contracts. ADV lately only about 100,000, so doing about 3x, so fairly robust day. And if you've been watching Intel of late, it's been following a lot of the big tech names, and indeed the market had a pretty good 2014, up fairly aggressively. It was down in the mid to low 20s at the start of the year, and it closed today 36.19. So it's been a pretty decent 2014 for Intel. So that doesn't really surprise me. I look at the numbers here, and I see that puts substantially outnumbered calls here going into the earnings, about 1.6 to 1, or so about 180 some odd thousand of those options going up today, going up on the put side of the fence versus just a little over 100,000 on the call side. So not surprisingly, perhaps a lot of people concerned about perhaps hedging and locking in. Some of those profits are indeed specking to the downside. Net delta is still positive on the day, about 100,000. That's very small for a day like today. You'd think if it was going to be net long, to be a lot more than that. So the puts clearly active out there today in good old Intel. And of course, that wasn't the only active name on the day today. You can't go, it seems like, a few shows without talking about Tesla. Tesla actually underperforming today, only down just about 0.5% or so in today's activity. But the past few sessions have not been very good for Tesla as a whole. It's been pretty much just chopped down at the knees. And you talk about at its highs, which was not too long ago, it hit about, in the 260 or so range. It's off substantially from that, closing today 191. I think I saw a stat today. Elon Musk out about nearly $3 billion on that name. I'm sure he doesn't miss it, but still, actually, I was off. The high was last September of 291. It hit a share, which is crazy town for that name. So it's off even off about 100 handles from the high there. So it's been a bad run, a bad Q4 into Q1 here for Tesla, losing about a third of its value out there. So not surprisingly, that one pretty active overall these days. I'm sure, wish Alex was here. He can give us a little bit of insight into what's been going up on the old OX platform from a Tesla perspective, as well as Intel, and maybe even the currencies, all the other names we're talking about today. Maybe we'll get that color from him on Monday. Looking here now, it's like the Intel number is actually out. Looks like it's pretty good, about 75 cents. Were you guys talking Intel at all in the chat room today, in the pitch chat today, Mr. Rock Lobster?
We did. We actually looked at like the 38 time spread in there, like Feb, Jan, for small dollars, 33 cents. We have some Intel bulls. I'm one of them. I don't know. I thought the number looked okay, but, actually for the time spread, it looks like this spot is not terrible for it. So, of course, I like to see it up about $1.50, but that would make it really tasty. But it's small bananas, something like that. I don't do very many earnings plays, but I do like the chance to scoop some Intel every now and then. So, but yeah, we did, and I think that's going to be the highest earnings number on record for Intel. I don't know what all the, how they always backtrack it and pull it out, and
they go change it after the fact.
Yeah, so but it looks. I mean, they're expecting 66 cents from consensus I see. So I don't understand why it's so bad.
Yeah, it's off about $1.
Maybe they're saying everything in the future looks cloudy and we're scared.
Yeah, the actual number.
We just made some money.
Yeah, the actual number is meaningless next to the sentiment after it, of course. And that's if they're downplaying the future, then that'll hurt it. It's off about $0.50 right now, or a little over 1%. In the after hours, that ATM, that 36 straddle going out about $1.60 or so. So people pricing in a wee bit of a move here in Intel going into the earnings. We'll see how that plays out.
I love the yield.
Yeah,
I love the yield.
Yeah, you can't really argue with that. It's been a decent yield play. It's certainly been a good underlying play that, you can't really argue with either of those two facets. You're certainly a diehard scooper out there, Mr. Rock Lobster. So you're not doing your usual free gamma and go away this time, huh? You're going through earnings. You're riding the bull all the way through.
Yeah, it's just one of these. This is one of the things for me, it's an infrastructure. Anything that supplies is like one of the leading suppliers to internet stuff is just something I want to own. So I think the growth picture for the internet and the internet suppliers, like it's kind of like Levi's, he wasn't a gold miner, but he sold the jeans to the gold miners. And there's probably 4 or 5 major companies that supply tons of stuff to all these firms. It's the same story since 2000, but now those server farms are growing and all that kind of stuff. And I just think Intel is there, and they just keep finding a way to take their little chunk of the internet. So
Yeah, and they had a good showing at the Consumer Electronics Show, kind of rebranding themselves a little bit as kind of trying to be not just the Intel inside the PC, but kind of really inside everything, wearables and everything, really kind of pitching themselves as a broader technology play. And hey, we make a lot of stuff that's really cool, and we're going to power a lot of cool stuff, smartphones, wearables, not just your old big PC, the truck, as Steve Jobs put it. So interesting stuff out of Intel. Yeah, you're right. It's a fun one to watch. I got a little tired of it after I was market making in it for many years because it seemed like the inevitable paper flow out there was, particularly in the .com period where Intel was obviously a big player and every big fund had to have it. So pretty much every expiration cycle, whenever you'd add a new series, the script was written ahead of time. Essentially, every big fund came in and crushed every call on the strip and bought every put on the strip, and so that skew would just get jacked to all high heaven. And so what you ended up having to do every time a new series was listed was just try to front run the paper pretty much and just try to hit every bid and every call in the book and buy every put you could before the paper came in and did it for you, and then hopefully you could survive until the next cycle. So it wasn't the most exciting. To say the paper flow was one-sided would be generous. So I got a little tired of watching that skew go in my face all the time. But other than that, it was fun. It was fun to trade. An interesting product. I think it's probably changed up a little bit now as the order flow out there has obviously changed, and Intel has clearly changed. But
priced as a value stock, but I think it has some growth potential. Yeah,
certainly does. I mean, they're reinventing themselves. They've kind of trumped the competition from AMD. Now that was their big rival for a long time, and now they've kind of grown beyond that. They've spun off divisions they don't really see as needing anymore and kind of targeting in some other areas. Hanging criticism against them these days, I guess people are saying that maybe they're getting spread too thin again, doing too many interesting new things, which I don't know. We'll see. But it's interesting stuff. They showed off a lot of cool stuff in Las Vegas over the past week or so. So we'll see how that plays out going into the earnings. That you're right. So far, doesn't seem to be playing out that well. The market not loving it. It's down about half a buck right now. We'll see how that plays out as we roll on into our next segment. Yes, it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you know the drill by now. You know what that funky tune means. It is time once again for the Odd Block, the portion of the show where we dive into the weird goings-on behind the scenes in the realm we like to call the options market. I'm going to kick things off with a frequent contributor/violator here on the old Odd Block. That is indeed Taiwan Semi, ticker symbol TSM. Good day for them, despite what's going on in the market today. They had earnings before the open, so clearly that's playing a big role in that. Closing today, $22.89, up nearly $2 or nearly 9%. On the day. This is the name, as you might expect, does decent volume, about 3,000 contracts a day, doing over 10x that, doing nearly 40,000 contracts today. And in spite of all that upside love, pretty much the lion's share of the action today coming in the puts, about 2.3 to 1 puts over calls. It doesn't really surprise me when you see the paper we highlighted on the site as well. In particular, listeners, if you pull up the option chain for yourself in the Feb month in particular, you'll see exactly what I'm talking about. One big trade kind of stands out above the rest. It was the Feb 23 puts. When we profiled them this morning on the site, went up 17,219 times for 85 cents. Paper buy-in went up in one block. That's a sizable block. That's a good chunk. As the day continued, about 3,000 or so more piled into the tune of just a little over 20,000 total on the day. Only 175 contracts open on the strike, so clearly all open in paper. And it looks like it went up tied to stock. We saw, at least with the first block, about 837,000 shares going up marked as a buy. So they're buying puts, buying stock, doing it on a bit of a ratio. Don't know if more stock went up with the latter kind. We'll have to see. But it seems like it went up on a little bit of a weird ratio. So clearly they're looking for some sizable vol to materialize in the next month or so, which is interesting because if you've been watching Taiwan Semi, it's not known to be a massive mover and shaker out there. And it's had some range of late, about 23 to about 21 over the past few months. But so about 10%, which is not bad. But it's still not known to be the most volatile of names to see size puts and stock going up like this. Mr. Rock Lobster, kick us off here. What's your take on this this ratio puts and stock we're seeing here in good old Taiwan Semi?
So this is the thing with this one is it looks like the customer's buying puts in stock from all the pricing, right? Lifting the offer on the puts.
That's how it looks.
Buying, I mean, it's looking like that, but who the heck would want to do that trade? I don't know why you'd want to buy.
I just call them as I see them. I leave the psychoanalysis to the others.
Exactly. Why, when I wrote, I'm like, okay, that's what it looks like. That's what the trade was. Who the heck is buying the straddle in this thing? After it's already up $2, where's it going to go? But somebody did. That's what it looks like to me. Now, it could be like, I don't see it as a stock replacement where the stock traded because they printed it as a buy. So this to me is a head scratcher why you would buy the Feb 23 straddle unless you think this stock is going to do something that it's trading at a 1-year high. It usually takes about 4 months to go $2. So we'll just call it unusual activity. This is the head scratching paper.
Yeah, I don't really see a scenario where I'm like, I got to get 20,000 of those and I got to do it with stock. Yeah, it's a weird one. That's why we call it the odd block, listeners. Maybe you can send in your own ideas, your suggestions for why you may be interested in doing puts and stock out there in good old Taiwan Semi. Meanwhile, we'll move on to a newcomer to the odd block. I'm not sure how I even pronounce the C of consonants and vowels. WeyerHaeuser, I suppose. WeyerHaeuser Company, ticker symbol WY, closing today $36.37. Pretty much unched on the day, which is a feat in and of itself on the day when most of the market is down about 1% or so. And this is the name that does, in spite of their rather convoluted name, does about 3,500 contracts a day, doing about 10,000 today. So pretty decent volume here in good old WeyerHaeuser, I suppose. And what we're looking at here was a bit of the old up and out, as they like to say here. In particular, what caught our eye started off on the Jan 36. That's regular Jan, not out there in the weeklies. The Jan 36 calls going up 5,000 times, and then the April 38s going up also for 5,000 times, net of about 7.5 cents. They might have done it on some splits here. Went up in 3 large blocks. Looks like the paper is selling to open on the April 38th, only about 1,000 or so open there, and closing out their short here on the Jan 36s to the tune of 11,000 open there. So there could be potentially some more for them to go here if they're maintaining this little buy right. Clearly they like the levels they're getting out here in this name. Of course, doing all that for 7.5 cents all the way out to April. That's an interesting one. I'm not sure if I would rush. I would rush to embrace that one either. I would probably look for a little bit better level, or perhaps keep my powder dry on that one. 7.5 cents to give up all that time between now and April. Another interesting one, perhaps a bit of a head scratcher as well. Mr. Rock Lobster, what's your take on our friend out here in WeyerHaeuser doing a lot of contracts for not a hell of a lot of premium?
Exactly. This is, but this is kind of the standard. You are long the underlying, it gets to your strike, right? So they're happy on the underlying front. So they'll just, they'll book a small loss on the 6 calls, and then they'll sell and then they'll roll up for small dollars. So they still have the call premiums can still come in. I think this is kind of a standard pension fund type trade where, they're long a pretty good chunk of WeyerHaeuser. Dividend yield is, 2.2% or something like that, 2.5%. And it's a indirect play on, owning timber as an asset. And they just do the roll knowing that this is a stock that's not going to move more than like 7 or 8% a year on the way up. And they're happy with that. So all of a sudden that extra yield looks good to them. But yeah, as a roll, it's just a tough spot for the roll. But they're long the stock. So I'm sure they have. And anyway, that's the only thing I would think of is they you would have to be long the stock to want to put this trade on.
That's the only way you get a smile on your face.
That's a lot of margin for not a lot of dollars.
Yeah, that's definitely a love your broker. And you're right, it has the hallmarks of being an advisor because they're doing it on like that quarterly 3-month basis, which advisors like to play on. And they kind of just need to get that yield. They don't really care how much it is, I guess. And they do love their broker. And they want to put up 10,000 contracts for him for only 7.5 cents. Because who doesn't want to do that for their broker? They love him so badly.
Yeah. I mean, the hardest part is they had to pay 65 cents for the Jan 36s, and that was a quarter over parity with only a day to go.
I saw that. That was not a good fill.
That's a total screw job.
That's what really crushed the spread. I started looking at that as I was rating it. I said, "How did they get such a terrible price?" It was the Jans.
It was not. It's only one day.
Maybe they don't love their broker as much after that fill. I don't know.
The problem is they probably don't know. They just say, "Okay, I want to do this for less than a 10-cent debit," and the broker went, "Okay."
Wow. Yeah. Either way, I would not be too happy with that fill.
There's some potential short gamma risk there, but I don't know. But all they're doing is dumping a bunch of calls there along anyway, whoever that other side was. So it was not the, what's funny is we have this show, right? The show's free. You can download the option block, right? And for the cost of free, you can save yourself a dime 5,000 times. I don't get it, but whatever.
Yeah, that you put in that perspective, it makes the show seem even more of an infinite value.
The show, well, I would dare say priceless for the show.
Indeed, when you look at it on that scale, that fellow had just listened, or perhaps his broker had just listened.
Exactly.
Wow.
That could be the title of the show today: a priceless option block.
Priceless. Crappy Jan Phil, whichever way you want to go whichever way you want to go on the theme as we move on into our final name here in the old odd block is a name we talked about once or twice before. Brisol-Meyers Squibb, ticker symbol BMY, closing today 61.63, down about $1.32 or a little over 2%. So outpacing the market to the downside. Not a good sign here for good old BMY. What we saw out here in good old Brisol-Meyers Squibb was some actually out of the money call buying, some fairly sizable out of the money call volume to the tune of the March 67 halves going up when we profiled them this morning 10,000 times. Paper buying for 51 cents as the day continued, about 5,000 more piling in to the tune of just a hair shy of 15,000 on this strike. That's right, I said 67 half, stock closing 61 half roughly today. So it's got some room to run here on the upside for these calls to really start making some money. About 1,200 contracts open on this strike. So clearly all open in paper. Went up pretty much, at least the early print of 10,000 went up in one mega block, pretty much just straight up lifting the offer on one exchange. Not surprising given the fact that it's a pretty sizable trade here on this name. So this is serious business. Earnings here are coming on the 27th. So if he wants an earnings play, he doesn't have to go all the way out to March. He can get a little bit closer to home, maybe save himself a little bit of money. But clearly, this is where he's drawing his line in the sand here. March and the 67 half strike. Mr. Rock Lobster, take us home on our friend who's perhaps a wee bit of a bull here in BMY.
I think he's more than a wee bit. Don't you think he might be? I guess what would be a
modest bull?
A modest bull. That's 10% to March.
A wee bit optimistic.
I don't even know if it's ever made a move that big.
Maybe he's short the earth.
Okay, let's put it this way: from October to December, it had a range of about $2 around 58.
Let's just assume this guy's really savvy and he's short the earth and he's just betting against himself here in case the worst comes to pass.
I guess so. I mean, now it was below 50 in October. It had a huge run, like in October when the market looked ugly and it just exploded kind of out of the gate. I mean, I guess it has the potential to make that run, but holy gosh. And do they have a drug coming out or anything? I mean, I don't know. It's just, to me, it's a giant bet. Now, it has a delta, and I believe they are going to catch the earnings cycle. It's the 27th. So I guess it could be a big surprise, but that could also be a just big potty flush too. So I didn't see any stock. Selling stock against a 67 level call in BMY would be a iffy bet at best, even on a delta neutral basis. So this guy, I think, is the biggest Bristol-Myers bull there is today.
Like I said, a wee bit optimistic, a wee bit.
Exactly. He or she, they win. Now, of course, Bristol-Myers opened $70. Then we both look like a bunch of jamokes. But he would have done better buying like the 62, 65 or something like that.
Either way, we still look good because he could have done it a hell of a lot better if that's the case. But c'est la vie.
Yep.
We digress. Just want to point out the size, let you draw your own conclusions there, listeners, about our friend here gobbling up all the earth here, all the upside here in good old BMY. Meanwhile, that's all the time we have for the old odd block. Like I mentioned, no Viceroy today, so no Express block, but we didn't get a chance to do a little strat block on Monday, so I thought we'd squeeze that in today and dive into some strategery with Uncle Mike Tusaw.
It's time to dispense options, wit, wisdom, and education. It's time for the Startegy Block.
All right, Uncle Mike, you know the drill by now, and hopefully listeners, you do too. This is the portion of the show where Uncle Mike dons his finest smoking jacket and grabs his stone tablets off the wall, and perhaps if he's feeling so inclined, perhaps his bubble pipe. And he sits on down by the roaring fire to dispense some options, wit and or wisdom, whichever he chooses. Uncle Mike, what's it to be today, wit and or wisdom?
Trying for a little bit of both today.
Okay.
What I want to go through today is just a little bit of a highlight of what I'm doing right now in terms of playing the market. We all know me on this show as I'm the world's most hopeless bull in the bull market. A couple things with which I'm doing at this stage. Going into the year, and I'd mentioned this on the show before, I had pretty tight hedge on my long SPY positions, the 199 put. Going into the year, we closed last year out at 205.54 on SPY. So 98% of the asset is protected minus the cost of the put. And then for the long call position with which I have on SPY, I haven't bought a call all year on SPY actually for that position. So with that, a couple things with which I'm doing. Going into the year, I like to be flat or pretty close to flat. I can't say I've done that every year, but going into this year, particularly, I really did want to do that. So why do I do that, and what are the advantages, and at what point am I going to get back in? Well, let's go through some of these things. First off, at what point would I get back in? If we go up to the 205, 206 level on SPY, probably more the 206 level at this point, that would be when I would get back in. I want to see green on the screen for the year before we get long the market. And the reason for that is that if for some reason we continue to go lower and lower and lower, even though I am the world's most hopeless bull, if the market's going lower and lower and lower, it's much better to be in cash and cash and cash. I'd much rather have clients calling me saying, would you do something with my money already, as opposed to how come we're down 40%? Those are phone calls that I've really never had, and I really don't care to have, quite honestly. So with that, at what stage would I get back into the downside? Because after all, had you gotten in at the lows of the market in the spring of 2009, your money would have tripled by now on the S&P 500. So what do we look at it? Why do we look at, and when do we get back in? So for right now, for the SPY long stock strategy, or the long underlying strategy, we're still long the put, and the trades with which we have done so far this year, for that one, we have sold a covered call. I actually ended up doing a day trade, not by choice, but on January 13th it was. I ended up selling a 206 call for the January expiration. So this is actually a couple days ago. And the concept was just to be able to have a little bit of premium sold against that 199 put that I was long. We had not gone positive on the year as of yet, but I wanted to sell it a little bit out of the money just for the purpose that we were still negative. And if we did go back to being more negative, it would be of benefit. But if we went a little bit higher, really wouldn't be missing too much, because of the fact that we would just be starting to go positive. So at that stage, we ended up making money on a day trade. I sold it for 90 cents, and then I usually like to get out for around 20% of the underlying, or for around 80% of the potential profit. So we ended up getting out at 19 cents instead of 18 cents. I think I was just looking at it and it was a penny off, and I said, well, what the heck? 1 penny, we're good with that. So we ended up getting out of that in the same day. Earlier in the year, though, we got down to a level with which I felt comfortable dipping my toe in the water as a bull. So for both the long call strategy as well as the married put strategy, what we did on January 6th was we sold a 195-190 January put spread. We got just under 50 cents in credit. I think we got 47 cents in credit. And a couple days later, we ended up taking profits on it. Now, why did we sell that put spread and not go long the call? Well, first off, we had a key number to the downside with which I felt comfortable getting into the marketplace, 2,000 on the S&P. We weren't exactly at 2,000, but we had a little bit of a bounce off of it. And in order for that put spread to be harmed, so to speak, we would have had to have gone through 2,000, a key number on the S&P. We would have had to have gone through 198, which was an approximate support level. It's not exactly 198, but around 198 on SPY. And after that, we would have had to have gone down another 30 points to get to the short strike price of this put. And I had very minimal exposure to begin with because there was no long calls. We had an over-hedged married put. With all those factors involved, combined with the fact that we had an increased implied volatility, allowing me to have a short put spread so far away, all those things together made the stars line up, so to speak, for actually doing that put spread. And so a couple days later, we ended up making a few pennies on that. Then haven't done anything on the SPY call strategy until the one I'm going to mention in a moment. Did the covered call on the SPY married put strategy. And then that leads us to later in the day on the 13th, which was on a Tuesday. For those of you that followed the market on Tuesday, it went way up and then it went way down. Same thing. I did the exact same strike prices by selling, and this would be for both strategies, both the married put as well as the long call, the January week 4 195-190 put spread. Now, once again, why did I do that? Well, let's remember, I am a bull, but I'm just trying to be a very cautious bull at this point because the market has not proven that it's going to go positive yet this year because, well, it's negative. It's not negative by a lot. I understand that, but it is negative. So the same reasons as to why I sold the 195-190 put spread for next week is because of the fact that the S&P is going to have to go through 2,000, which it did today. From there, we're going to have to go through another level of support, the 198 level. And then after that, we're going to have another 30-point drop in the S&P for the short strike price to be touched. Now, at that stage, we'll have likely higher implied volatility. Should that happen, I can't guarantee that, but most likely with the inverse relationship along with the stock market and the volatility market, we'll have higher vol. So what that'll give me the opportunity to do is if I'm wrong on this trade and the market continues to drop through all those things with which I mentioned, which it has dropped through one of them so far, if that's the case, I have the ability to roll down this put spread, most likely to another put spread further out at either a credit, or I can stay in the same week, roll it down because of the fact that we'll have higher implied volatility and we'll have 3 days in this put spread, assuming it doesn't go way down between tonight and tomorrow. It gives me the opportunity to bail out should I be wrong. So I'm not just throwing darts at the board here. There's reasons for why I'm doing these things and why it would make sense. Now, should the market go back up, if we go back up to the 206 level tomorrow and I got to start buying calls again and lowering my hedges on the underlying long put strategy, that's fine. I'll be ahead about $1 on the year, and so I'll have a little bit of leeway. And, I would have had basically a couple weeks off for the most part. So with all that being said, that's what's going on right now on the strategy block. I like to look at hard numbers and certain barriers in terms of my technical analysis, if that makes sense. I don't look at moving averages, MACDs, or anything like that. I like to look at hard numbers. And the bottom line is if the market's negative on the year, then you might as well be in cash. And if the market's positive, you got to participate on it in one way or another. And that is the strategy for today.
Well said, sir. Uncle Mike coming to us via the magical technology known as Bluetooth. If you're wondering why he sounds a little bit distant, where it's, technology doesn't work that well in St. Charles to begin with, listeners. And then Bluetooth on top of it, we're just adding a wrinkle upon a wrinkle. But don't worry, we'll get him all sorted out for next week. Meanwhile, we're going to keep on rolling because it is Thursday. I want to squeeze in some of your questions as well. So we'll have time for at least one here in the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is indeed the portion of the show where we break down all the questions and comments you guys send in. We love to hear from you guys. I can list all the ways, but you guys probably know them already. If not, surf on over to the website. Easiest place to do it there. Find us on Twitter, Facebook, all that fun stuff. I want to get to your questions. First one here is a bit of a look-back question coming from Faye. She wants us to review a trade she did last year, give us our insight. She writes, back on October 24th, I bought two of the D305, 315, 325 call flies in Amazon. I paid 91 cents for it. The stock moved through the fly, so with Amazon at 326, which is outside that fly now, listeners, I sold it for $1.50. That's a whopping 55 cents a contract after commissions. What adjustment should I have considered with the fly since I didn't see Amazon retracing during the Christmas season? Note that I have a 9 to 5, so I'm not watching the screen all day if that affects what you suggest. Sincerely, Faye. Well, it's a good question, Faye. I think people sometimes get a little bit too wrapped up in like the long flies, and they don't think about what they're putting on per se. At the end of the day, what you're doing here with these long flies, the meat of it is the kind of the 05, in this case, the 05, 15, 1x2. You're putting on a vertical spread and a ratio vertical spread at that. So that's kind of the heart of this trade. The 325s are there in case the worst comes to pass, like it did in this situation where you're too right and the thing blows through your strike. But people think that sometimes there's some magical adjustment you could do in there to really fix that. But in this scenario, in these types of trades, what you really want is, of course, for that stock to go right up to 315 and sit there like glue and do nothing else and let that premium erode, and you get your max value for that 305, 315 ratio vertical spread that you got there. Unfortunately, Amazon didn't play ball with you, and you were too right in your scenario here. The stock blew through your strikes here. I have to pull up a chart to see exactly. I don't have it in front of me to see if there were any pit stops along the way for Amazon in that movement range where you don't say when you got out of it either, but it's just the price. But if there were opportunities for you to maybe take it off a little bit earlier, because that'd probably be my first suggestion, is when it got around that 315 range, which is your max point there. Obviously, you're not going to get maximum profit because the decay hasn't occurred yet. I know it's kind of hard for people to make that mental adjustment. I got to take it off before I really want to, but that probably would have been the best point. Clearly, in hindsight, it certainly was, but hindsight is always 20/20. Of course, in this scenario where it happens, you should be, in this case, maybe thankful that you got some profit out of it at least. You can't lament too many on the winners, but I would probably say the best time obviously would have been right in that guts level where you're getting right at that max point. If you can somehow have gotten it off there for a little bit better level, I think you probably would have been a lot happier with the trade. Mr. Rock Lobster, perhaps we'll start with you. What do you say to our friend here, Faye, who was a little bit too right with her call fly on Amazon?
Well, this is, I guess, Alex, our resident viceroy, talked about how to trade these flies. And, you buy a December fly in October, right? So the first off is you are buying essentially a gamma killing trade, meaning when you buy a butterfly with looks like a solid 6 weeks to go to expiration, the way the trade is designed, it is not going to perform a whole lot when the stock moves. So if the stock was moving against you, you're not going to lose a lot. If the stock is moving for you, you're not going to make a lot. That's what a butterfly is. Now, you chose a 10-point wide butterfly on a $300 stock, right? That's kind of like a fly on an elephant's behind as far as the width of the strikes are so small relative to the underlying moves, you're not going to get the kind of Boffo performance out of the fly. You're only really going to get really good performance in the fly as you get close to expiration and you get that shot up into the middle strike. So I mean, the fact that you got some pretty decent money out of it, it returned, I know you paid 91 cents for it and you got 55 cents out of it after commissions. I'm hoping that's a 55-cent profit on the 191. The problem is just the flies, they just aren't worth very much until you get a little bit more around expiration or if you move the strikes farther apart. So actually, that's something we do at Option. We spend a lot of time on is how really you structure a fly to take advantage of the move you want. And it's just that fly was, unfortunately from the setup, it was really never made to do anything in the time frame that you gave it. So kind of from the outset, you had small chance of really making a whole lot of dough on it, to be honest.
Yeah, I mean, it's hard, easy to lament this one, but you probably should be thankful she did all right on it. I'm looking here at the chart, and you didn't have much opportunity really to get out. It had a pit stop really briefly, but it kind of just gapped through that strike. It opened at 316, it hit 332 on the same day, so it blew through everything here. Didn't really have a lot of time.
Like the worst part was like December 2nd, it closed like 320 something.
Yeah.
So
if you had
even
waited,
then, and there was so much movement on it, it would have been a hard thing to watch at a certain point.
Well, the other thing with a butterfly trade, typically if I'm ever doing a butterfly, I have a limit order and almost a good till canceled limit order almost the instant after I put it in, if you're looking to make it just a bullish or a bearish butterfly. Now, if you're looking to make an adjustment along those lines, then that's a different story. But if you have a 9-to-5 job, I think the way with which to look at it would be, okay, you spent 91 cents on it, and if you sold it for $1.50, that's not a bad profit at all. If you do that every time on every trade with which you make, you're going to make a nice living doing this. And so if you have a 9-to-5 job, then I think what would make sense is just to have a standing good till canceled limit order as to when to get out of it. If you're looking to make adjustments to a butterfly, that's difficult to do with a 9-to-5 job unless you have access to a computer. But I think that what ultimately you should look at this as is you made a very nice profit on this trade. And were you too right? Yes. But in the future, if you're looking to make a higher profit on a butterfly, then I think Andrew's right. You just need to make some adjustments to the strike prices and maybe make them a little bit wider because of the fact that he's right. This does kill your gamma.
Yeah, good stuff. I think I know it's hard to hear sometimes, but sometimes this is not a bad one. You shouldn't be too upset about this. And indeed, if you want to get these kind of movements in Amazon, maybe give yourself, like Andrew and Mike said, give yourself a little bit more room to run, because looking at the chart here, you didn't give yourself much room at all. And Amazon took advantage of that and blew through your strikes and beyond. And that's certainly not an unprecedented scenario for Amazon. It tends to do that. So bear that in mind with your underlying selection and indeed your strike selection going forward when you're doing this. But all things considered, Faye, we've seen a lot of bad trades here. This is certainly not the worst we've seen. This actually is a profit. This is over 50% profit. So be happy with that. Not a bad do, as we used to say on the floor. All right, that's going to do it for the old mail block. Now we'll do a quick around the block segment.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
It's Mr. Rock Lobster. Which way you leaning? What are you watching for the rest of this week into the weekend?
We've got Mario Monti and the ECB with their quantitative easing, but I don't think they're going to do anything because they're seeing what it did for the U.S. And the only thing that it really looks like that worked for the U.S. is just like getting back and going to work. Quantitative easing, I think, and all the money the government spent. I mean, we had some economic growth, but that's the slowest recovery in a long time. It was great for the stock market, though, so I got no complaints on that. So that's keeping the volatility high. And you got the Greek election. So there's two, what I would call future activities keeping the prospect of movement high. And I think we're still going to be whippy. I would not be surprised if we saw lower prices in the S&P 500 short term, even down to Mike's 195. Right now, the way we're moving kind of 1.5% per day. So that's actually just a touch from where we are now. And, the Swiss stock market just dropped 10%. That's a pretty big stock market to drop 10% and not have some spill-off effect on us. I'm surprised we're only down 1% for ourselves today, and we could be a little lower tomorrow. But fundamentally, there really is not bad economic news, pushing stocks down. It's just something is making people nervous there. Something's making people nervous there. So, you can still be a bull and still see this as a buy opportunity. I expect volatility, to stay kind of near 20, at least until the 22nd. If there's any more clarity on the Greek thing, it'll probably start to subside, but we're still going to see some vol, and it ain't going away.
Unless our listeners continue to take umbrage. I know they wrote in with Mario Draghi, you're talking about, I think, before, versus Monty, so they like to point that out to us here. So we will let you know that we are aware of that, lest the umbrage continue. What was I going to point out here? Oh, yes.
Oh, was I saying Monty?
Yeah, you keep saying Mario Monty.
He's the.
Yeah, I can see why you're doing that.
I got my Marios confused.
It's easy to get the Marios confused. I know a lot of our listeners have taken umbrage at you saying that, Andrew, so I thought I would point it out there.
Tell him I'm sorry. I just call him Super Mario, and then I won't screw it up.
There you go, Super Mario. All right, that's going to do it for the Around the Block segment. It's also going to do it for this episode of the Old Option Block. But before we go, as always, let's check in, see what's cooking with our partners here. Starting off with Mr. Rock Lobster. What's cooking in the land of the pit?
We have a learning how to trade stocks using options. So actually similar to the strategies that Mike talks about. Using options in an intelligent way, looking at numbers, selling puts to get long at a level, selling put spreads to get long at a level, and, create some long positions and try to create some alpha for yourself by using the inherent leverage in options and some risk control. When you rally, you sell calls against what you're long. And when you're falling apart, you have some puts, you roll the puts down. It's kind of like, we'll just call it the doing stuff webinar. That will be Saturday. Go to optionpit.com/events and sign up. And with all our webinars, we guarantee you will learn. Our guarantee is you will learn something.
And maybe I'm looking forward to your upcoming How to Structure an Amazon Fly webinar.
We could always do that.
A little bit wider, just in case you can call it What to Do When You're Too Right.
Exactly. Sometimes being too right is a problem.
All right. Speaking of too right, Uncle Mike Tusaw, what is coming down the pike in the land of RCM Wealth Advisors?
A couple things, and probably later in the spring, we're hoping to get our educational series going, Financial Planning and Option Traders Point of View. More on that in the coming weeks, hopefully. And then in the meantime, it is a fresh year, fresh attitude, down market. And if you do want to work with an advisor, even if you have just a couple $100 a month to invest, give me a call. Would love to work with you. I love working with people, and would be happy to work with you, even if it is for that little of an amount. My number is 312-212-3531, or shoot me an email at mtusaw@rcmfs.com. Would love to hear from you.
All right, good stuff as always. And I mentioned the Viceroy couldn't make it, but I would encourage you guys, if you haven't done so already, if you're not OS clients, then what are you doing? Surf on over to optionsexpress.com, sign up for an account today. And once you do that, if you are OS clients already, or if you're thinking about becoming one, let them know. Let them know you like the old option block, you like the odd block, the express block, all the different segments that we do. Let them know you like the show, because that's what lets them know that, hey, it's working. It's getting out there. You guys are hearing the show. You guys are liking it. You guys are responding to it. So if you haven't done so already, we love the feedback you give us, but give it to them. It's even more important if you want to keep hearing more episodes of the old option block. We love what you do. We love bringing it to you, and they make it possible. So let them know that you're hearing the show. And on behalf of Alex and the Viceroy, Alex not here, and on behalf of the Rock Lobster and Uncle Mike, and indeed the Viceroy, who could not be here with us today, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and for making it such a success. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.